Cap rates in the single-tenant net lease dollar store sector increased from the second quarter of 2015 to the fourth quarter of 2015 for all three major tenants by 31 basis points to a 6.81% cap rate. For the purpose of this discussion, the major tenants in the national dollar store sector are Dollar General, Dollar Tree, and Family Dollar. Dollar Tree experienced a modest cap rate increase of 10 basis points, while Dollar General and Family Dollar experienced 25 and 35 basis point increases respectively. Due to the rapid expansion of the dollar store industry's footprint, supply has become plentiful over the past few years. Lenders' concentration of dollar store tenants has caused banks to either hold off lending on dollar stores or to provide lesser terms when compared to other investment-grade single-tenant properties. Additionally, after the acquisition of Family Dollar by Dollar Tree, Family Dollar transitioned from an investment-grade rated company to a non-investment-grade rated company. Family Dollar became a subsidiary of Dollar Tree, which is rated BB stable by Standard & Poor's. The dollar store sector is dominated by the 1031 buyer with small absolute dollar requirements. In 2015, private investors accounted for 78% of all single-tenant dollar store transactions. As stated earlier, private buyers made up the majority of dollar store transactions in 2015. These investors typically prefer long-term leases and new construction properties. On top of that, dollar store properties in states like Florida and Texas are in the greatest demand as they are both income tax-free and exhibit positive population growth drivers. Family Dollar properties have become a favorite for 1031 buyers as their lease structure is favorable. Family Dollar's new lease prototype is for 15 years with rental escalations every 3 years or in the 10th year, and are absolute triple net with no landlord responsibilities. New construction Family Dollar properties in Texas and Florida with rental escalations every 3 years can command cap rates below 6%. Dollar stores will continue to garnish demand from all investor classes as they remain one of the only viable alternatives to quick service restaurants with long-term triple net leases priced below $2 million. However, investor demand will remain saturated in new construction assets with long-term leases. The tenants' cumulative expansion plans will create a steady supply of these long-term assets for investors.